Shiba Inu market is being manipulated by a small percentage of the whales for their own selfish interest, and this unfair manipulation of price to favor their own trade position is not only causing fear, uncertainty, and doubt, or FUD, but it's causing irreparable losses to retail investors. It's time retail investors learn this secret, which is causing them huge losses. What is market manipulation, and how does it work? Which theory explains market manipulation? Is SHIB price being manipulated? These questions will be answered in this video. We'll also discuss how SHIB investors can avoid market manipulation, so make sure to stick around till the end to find out. Giveaway of 1 million Shiba Inu tokens for lucky viewers of this channel. To compete, all you have to do is watch the video to identify the secret message. Comment this message to stand a chance to win from the jackpot. Now let's get straight into the video. Many retail traders just trade based on the internet hype without doing due diligence. That causes them to lose a huge amount of money to whales who take advantage of their lack of knowledge on how the market works. Whales usually have the competitive advantage of owning a huge stake in a given cryptocurrency. That way, they can manipulate the market to influence the price of that given cryptocurrency in their favor. We'll be looking into what exactly market manipulation is, how whales take advantage of retail investors through market manipulation, and the theory that justifies that. But before that, let's look at Shiba Inu and how it has been performing in the market. After the establishment of Bitcoin about a decade ago, other cryptocurrencies started joining the crypto market. In 2013, Dogecoin was established by Billy Marcus and Jackson Palmer to make jokes about how people invested in cryptocurrencies they didn't understand. Dogecoin represents the first meme coin in the world, but later in August 2020, another cryptocurrency with a Japanese dog breed theme identified as Shiba Inu was founded. Based on the Ethereum blockchain, Shiba Inu has a native cryptocurrency called SHIB, and now the establishment of SHIB proved to be a perfect alternative for those who missed out on the Dogecoin success. Interestingly, SHIB is launched with a mission of outperforming Doge, as its woof paper reveals that SHIB, the Dogecoin killer, can outpace Doge while still under 1 cent. And due to this, the two coins have been held up in a tight race with each crypto trying to prove its guts. But it wasn't until late October that SHIB managed to kill Doge for some days, racing above it in terms of market cap. It was amazing to see SHIB in the top 10 largest cryptos by market cap. In fact, not many people believed that they were seeing. It was a dream come true for SHIB holders, even as many celebrated the huge returns on investment. But even though Doge and SHIB may seem the same, there are slight differences between the two. Dogecoin is a coin running on its own blockchain, while SHIB is a token operating on the Ethereum blockchain. At the same time, unlike Doge, which depends on celebrities' hype for a price rally, SHIB has a strong micro-community called SHIB Army and a robust ecosystem that helps it to gain value. Much of what was promised in the Shiba Inu ecosystem is coming to pass, and that explains why SHIB is lately emerging as a force to reckon with in the entire crypto space. The roof paper talks of a native decentralized exchange, and today, we have a fully working DEX called ShibaSwap. This native exchange has grown fast in just a few months of launch to include 29 different crypto assets, with a daily trading volume of over $200 million. ShibaSwap provides users with the opportunity to stake their token to earn passive income. At the same time, the transaction fees collected on the ShibaSwap are automatically burned to reduce the circulating supply, making the coin more valuable. Shiba Inu has also launched its native NFTs called Shiboshis, which represent a collection of 10,000 unique NFTs. Shiboshis can be renamed at a fee of $100, which is then burned to help reduce the circulating supply, helping SHIB to grow in value. What is the market manipulation and how does it work? You probably have heard of market manipulation and wonder what the animal is, right? Well, market manipulation is an abuse of the market where the whales deliberately interfere with the free and fair operation of the market through false or misleading price movement for a given asset. Now, in our case, it simply implies the interference with the price of Shiba Inu for the benefits of the whales, and that is exactly what we've been witnessing. This normally happens at a time when the price is at its peak. So how does it happen? Now, once the price of Shiba Inu breaks out and an uptrend is confirmed, investors become more confident, and as the price continues to rally upwards nearing its peak, the hype around the coin hits high and new investors start to join for fear of missing out or FOMO. But to their surprise, when everyone is just celebrating the rally, something just happens and the price starts to dip. Fear, uncertainty, and doubt, or FUD, starts spreading even more among retail investors. Whales start selling off massively, and the media continue propagating the false FUD even more. Retail investors become uncertain, and we see massive sell-off as prices continue to plummet. But after a few days, the price starts moving sideways as it consolidates before picking another uptrend. At that point, the whales, institutions, and banks have started buying again at the low point when prices are at the bare minimum, with anticipation of making returns by selling at a higher price. The whales continue buying to restore confidence among retail investors. Later, the price starts to recover and another uptrend is seen. The FOMO is back and the hype continues, and the cycle repeats as the whale keeps milking retail investors for their benefit. Just imagine how you've been fooled all along through fears, not knowing that the moment you get prompted to sell, A whale somewhere is celebrating buying what you're selling, and then they'll sell to you at a higher price. What theory explains market manipulation? Well, market manipulation has been around us since the early days of stock trading, and it's fully present in the cryptocurrency industry. Market manipulation is justified by the greater fool theory. This theory reveals that investors can make a gain by buying overpriced securities and then selling it to another investor who's a greater fool who will be willing to pay an even greater price for the same security. And that's exactly what we've been witnessing lately with Shiba Inu. Is SHIB price being manipulated? Most definitely. The high volatility in the price of Shiba Inu can only be blamed on market manipulation. When Shiba Inu hit an all-time high of 0.88 Satoshi units recently, news spread of a whale whose SHIB investment of $8,000 at the time of launch hit $5.7 billion in just 15 months. This caused FOMO, even as the buying pressure increased with more retail investors joining the SHIB ecosystem. It didn't take long, and as many were lost in the frenzy of the price rally, something awkward just happened. The same whale who turned his $8,000 SHIB investment to $5.7 billion started offloading his bag massively, and by the end of the day, he had cashed out about $3 billion. That led to a 50% correction in just 8 days, even as the sell-off continued. And recently, when the price was at its bare minimum, another whale bought a massive $1.13 billion worth of SHIB tokens. That aimed to restore confidence among retail investors who are standing on the fence to join the Shiba Inu pack before the whales can milk them again. So as you can see, market manipulation and price influence is something that is much present in SHIB. How to avoid market manipulation? Well, it's possible to avoid market manipulation and trade successfully in the Shiba Inu ecosystem. All you need to do is to follow the trading acumen that the father of investing, Warren Buffett, has always used to become a successful trader. According to Warren Buffett, you should be fearful when others are greedy and greedy when others are fearful. Now that is the secret code to avoid market manipulation. With that in mind, you also need to exercise patience and have a goal before investing. Should you invest in SHIB, it is an amazing coin that can give you a huge return on investment. Just a knock off 1 zero is enough to give you 10 times your investment. And if it 1 cent, you can be sure to turn your few $1,000 investment into millions of dollars of money. The advantage with SHIB is that it's affordable, meaning that there is no huge losses when the coin crash. So there you have it, guys. Thanks for watching, and I'll catch you in the next episode.